FinView. My Finance Point.
Welcome to my YouTube channel. This is Greatness Speaking, also known as Dr. Mind Eye. I'm making this video to attend to two of the many questions that were asked in my free Telegram channel. And meanwhile, if you are not yet in the channel, the link is in the description. Kindly join to gain access to my free setup and analysis, trade ideas, and also free course to trade live and other things you'll be benefiting from the channel. While I may not be able to answer all of the questions that were asked yesterday, Friday, which I'm to attend to today, weekend, I would be attending to the first two. I was asked to talk about imbalance and change of character. Imbalance and change of character. A lot of persons do not yet understand, or even if they do, they don't yet know how to apply these two things to their trading in order to make money on a consistent basis. So I'll be doing my best to explain them now, even though there is more to what I will be explaining, which of course usually comes due to experience, which if you use what you'll be learning now consistently, you will gain that experience with it, or you get the experience from somebody else and also backtest and practice it. Now, starting with imbalance, quickly, I would want to explain the general concept of imbalance. I mean the smart money concept of imbalance. Why there is another side to it that I personally trade, but I would explain this in depth now and show you how to make use of it, how to apply it and make money from the market on a consistent basis. The concept of imbalance, technically, as taught by the smart money concept traders, is a way to know an area that will most likely attract the market. For example, if the market is currently in an uptrend, now imbalance will help you know that, okay, this area is likely to attract this market before it continues going up. So it gives you that edge, it gives you that confidence that, oh, the market will most likely come to this place. And how do you identify it? That is where the smart money concept method comes in, even though there are other ways I personally use, but I will deal with that now. Now, imbalance serves as a magnet for price. If price has gone far, how are you sure it will come back? So these are the ways that were taught, which is actually correct and right. I've used it, I still use it, and I would not tell you it is wrong. Now, in concept of imbalance is usually with three candles. Do not worry about the colors of the candles. Do not worry where they are formed. Do not worry where to start from. This is why you need to have a defined edge to know how to locate your imbalance. Let me change these colors now to bullish, because this seems like a bullish candle as I have drawn, or should I say highlighted here. So let's say this bullish set of candles. And how do you know an imbalance here? Pardon my color selection. Okay. Now, technically, and I would always refer to smart money concept because it brought the idea of this imbalance. Now, when two candles, the gap between two candles, the gap between three candles is referred to as an inefficient market. An imbalanced market. For example, this is a bullish candle, it opened below and closed above. So the close of that candle and the open of the third candle. Now the gap between this open and close is referred to as imbalance. The gap between this open and close is referred to as imbalance. So it is believed that when market moves up this way, then create this imbalance, it will most likely come back to this imbalance and continue to the upside. So this imbalance is more like the magnet to price, which will drag it back to come tap it before going to the upside. And most times it will break it. Now, why will it break it? See, imbalance is not, most times people use it as point of interest, but for the sake of this teaching, do not see imbalance as merely point of interest. See them as areas of magnet. Your point of interest, which some of you use other blocks, might just be below this imbalance. It might just be below this imbalance. Quickly change this color now. Your point of interest might just be below this imbalance where you are looking to probably take a buy. Let's say the market has been doing something like this, and you are looking to take a buy from this point when the market comes to this point. So your point of interest might just be here, but imbalance will serve as the magnet that will drag the price down to this point before going to the upside. Mind you, did you notice from what I drew, it reacted to the imbalance, pushed up, broke it, and went to the upside after taking the liquidity. So it serves as the in this price, it served as the magnet that dragged this price back to your point of interest. It wasn't serving as point of interest only, or those some persons, especially those using the 1 minute time frame, would have bought and taken profit here. Let's assume this is the 1 hour time frame before coming to this point. So it depends on your trading method, your strategy, or your edge. If your edge says that you must always have two areas of interest, which is point of interest, then you can look to taking this first area as your point of interest if you want to buy, and this second area as also your second buy area, simply because your method allows you to do that. But if your method allows you to use just one point of interest, then you would have to backtest and refine, know whether to take the point of interest at the imbalance or the point of interest below the imbalance. Meanwhile, something you must understand is that every imbalance has an order block in it. This imbalance here right now, if you switch to the, let's say this is the 1 hour time frame, if you switch to the 15 minutes or 5 minutes time frame, this imbalance is sitting on an order block. Why this order block right here, that will be your area of interest where you are buying from. If you switch to a 15 minute or 5 minute time frame, this imbalance is this order block is sitting on an imbalance. So the two work together, and you have to really backtest to understand it. But what I want, the message I want to pass with this video right now is to let you know that imbalance serves as an area of magnet that would most likely drag the market back. And the same for the opposite. Let me invert this and quickly change the colors of these candles to the popular candles we use, the red candles. And the same for the opposite. You can see the gap between the candle one close because it's bearish. Remember, for the bullish, we are using the close and open, the close of the bullish candle and the open of the third one. So the close of the bearish and the open of the third candle, the bearish, the gap, the space between it is the imbalance. And most time market will react to it and continue to the downside the way you want it. And most times it will react to it, break it, then goes to your main point of interest and continue. I wish I had the time, would have used this opportunity to explain endorsement and how to use it to know which of this area is valid to take your trade from. But time would not permit for that. This is the general and smart money concept of imbalance. Meanwhile, I just explained to you what an imbalanced market looks like, but I didn't show you how a balanced market looks like. A balanced market is a market that, according to smart money concept, that does not have this gap. Quickly, let me move this. Should I say duplicate or copy these candles quickly, so you will see how a balanced market look like. So I'll most likely reduce this candle size just to portray or show to you that picture. And quickly, let me do that quickly and just adjust. And if time permits, I'll quickly show you a few examples on chart before I talk about change of character. Just for learning sake, remember most times the next candle opened from where the last one closed. So this is not showing that picture right now, but just for you to understand what imbalances are. And okay, quickly look at this current price action. the candles I have here, you will notice something. Let me adjust this a bit to the right, to the left. Okay, let's assume this is a current market. And if you notice, if you check here, the close of this bearish candle and the open of the third candle, there is not much space between them. So you can't refer to this as an imbalanced market. You can refer to this as a balanced market because there is not enough space. So if the market is kind of bearish and come in, it will brush this area, take it away, and look for another area that maybe has an imbalance and will most likely attract the area to drop and reverse for those who trade reversal and limit other traders. So this area, 90% of the time, according to smart money concept, would not work. But this area would most likely hold, or should I say, market will definitely react to it, even if it doesn't want to hold, because inside this imbalance, there are other blocks, price levels, and algorithmic candle if you go to the much lower time frame. While inside this other block, there are imbalances if you go to a much lower time frame. But over here, the market is balanced. You most likely, except this is a standalone candle, a standalone green candle, which will most likely serve as an order block, which if you switch to a lower time frame, it also has an imbalance in it. It's a time frame combination. That's what I'm trying to talk about now, but I won't have the time to really talk about time frame combination. So if we have this candle to be a green candle in between these two bearish candles, this area would most likely hold, because even if it doesn't want to hold, it will most likely react, simply because if you go to a much lower time frame, let's assume this is the 1 hour time frame, you go to a 5 minutes or 15 minutes time frame, this will be not just an order block, but inside of it there will be imbalances that would attract the market to come to that point. So this is a balanced market, and the other is an imbalanced market. For bullish, I will invert the scale once again, and let me change all of these candles to bullish candles. And the same thing I just explained, the area would not be valid based on the current time frame, simply because it does not have an imbalance. It's a balanced market, but it will be valid if this is a standalone candle, maybe a standalone bearish candle. Maybe you are looking to sell, the market is coming from, the market is coming from the upside, does something like this. Maybe you are looking to sell it. Then this can serve as an area of interest, because if you switch to a much lower time frame, within this other block that is here, there are imbalances and all of that. So I've actually spent time explaining this. And quickly, let me see if I can see an example to show you on chart before we continue. The most recent price action, which was as a result of this buy, you would notice it has this same imbalance I just talked about. Let me quickly use this. Now, this is the open of this candle, the bullish candle, and the open of the third candle. What did you notice? There is a space between the open of this bullish candle and the open of the third candle. This candle 1, this candle 2, this candle 3. So the open of this candle and the open of the third candle, the space within it is an imbalance. And this is a 15 minutes time frame. And that space is where the market actually came, even though it broke that whole space. But that serves as a magnet for this price to come back and react to maybe an order block that is below it. Let me switch to a 5 minutes time frame, or even 3 minutes, whether you will see an order block below it. For this trade, I used the price level. I did not use neither order block nor imbalance. But from what I just explained, did you notice just below the imbalance that we highlighted, there is an order block? And that order block was why this market came to react to it. And Of course, it's also pierced below for those people who usually would use here, just as the other block that use the open and close price, they might be knocked out. While those who will be using the wick and below the wick as their stop loss, like I did, will be saved. But going to even a much lower time frame, which sometimes I do not bother to go to. Now, for those people who understand how to use wicks, I believe those who have taught must have learned how to use wicks for price selection. And if I had gone to a much lower time frame, this would have been my entry, and that would have been 1 to 10 risks to reward instead of 1 to 5 that I got from the trade initially. So that is it. Bullish imbalance that that attracted market to come back to that area. Let's see this area this sell was taken from, this very area, as another example before we talk about change of character. Now looking at this area now, where's the imbalance here and why did the market come back to react to this point? Even though I can see imbalance here, remember I told you should not bother about the candlestick colors. What matters is the open and close of the candles. So, but let's go to a much higher time frame to build the story downward so you will see reasons for the trade and how to locate this imbalance. Okay, coming to a much higher time frame, the 1 hour time frame, looking at this very chart, you would notice the imbalance. There are different ways to locate this imbalance, which I told you, but I'm teaching you the smart money concept way. Personally, I will locate it with these 2 points, but using the smart money concept way, remember it is the close of the first candle and the open of the third candle. This candle 1, candle 2, candle 3, 1, 2, and 3. So the close of this candle and the open of this candle, this whole area is the imbalance area, which is serving as a magnet for this price to come back to this point. It's serving as a magnet. It does not necessarily mean this area would hold and the market will reverse from this imbalance area, although it can serve as a point of interest. Like I told you from the first example, after getting this imbalance, you can also look to the top of the imbalance to see if there is a valid point of interest where you can take the trade from. Like I said, I do not have much time for this video. I would have explained to you how to know where a valid point of interest is, so you would not find yourself taking multiple trades that would not hold, or should I say taking multiple losses. So moving to the 15-minute time frame from this same trade now, the 15-minute time frame, coming to that same area, this is the whole imbalance area we saw from the 1 hour time frame, and above it is an order block that would definitely hold. And as you can see, that was where the price reversed from, just above the imbalance area, which if you will go to much lower time frame, which of course for this trade I did not go to that time frame, I was okay with what I got here. This is just about 8 pips stop loss, so very okay with 8 pips stop loss. There is no need for much refinement where you will end up losing or missing the trade at the end of the day, because if this trade was to be refined, you will end up getting somewhere here as your point of interest, and as you can see, you missed it with 0 point. That should be 0.1 pip. So I'm very okay with this area, and that was why the trade came from there. But you can see how I explained it. Even though this trade was not taken due to imbalance nor order block, but with this explanation, you can see everything works in the market. Everything works. There's nothing that doesn't work. So whether you use order block as your reason for your entry, fine, you definitely get the same entry. If you use what I use, definitely this is where you get as your entry, which is the reason for this. I actually had this up this way so as to explain it better. You get, so that is it for this trade. Whatever method you use, you just need to define your edge backtest enough so you will not end up taking almost every imbalance in the market. There are imbalances and other blocks everywhere, but how do you know a valid one? That's something you need to take time to backtest or learn from someone who already know how to select valid areas. For example, this area is a valid order block, and if you go to a much lower time frame, valid imbalance also. It even has its own imbalance here, which if you check here now, the space between these two candles is an imbalance, and from the look of things, the market reacted to it, but unfortunately it couldn't hold. Just like I explained to you before, it can react to it, then break it and use the other side. So that is that for imbalance. You've seen both the bullish and bearish example of the current price action, the current trades. These were Friday trades. That was yesterday. And both the bullish and the bearish trade would have been something you'll be able to catch if you apply imbalance to your trade and other method which will be of help with time. Now, let's just talk about change of character, which is the second question and topic I was asked to quickly talk about in the free Telegram channel. But before then, I want to quickly show to you my book. I want to quickly show to you my book that has been out for a while now, which some of you are aware of, and some of you have purchased it. So to get it, you can simply navigate to my website, mindeyetrading.com. This book was written as a result of helping those who are unable to afford my mentorship to be able to, get the book and also get access to almost everything that I teach in my mentorship. The book contains all you need to know to create an edge, all you need to know to trade and be profitable, all you need to know to succeed in the forex market. And it comes with so many exclusive bonuses, which you need to read through this website before you even bother to buy. Read and understand carefully, read what's inside. You can know about the author and why you need this book, and especially the exclusive bonuses that are inside the book, the bonuses and privileges it will give to you, especially by getting access to me and going on a monthly call with me to learn more about trading. Go even deeper than I wrote in the book. Even deeper than I wrote in the book. So after reading through, you can simply click on order now, where you get to buy it, whether you are a Nigerian or a foreigner, whether you reside in my geographical location or elsewhere. So when you click on order now, it's going to take you to where you'll be able to check out. You can decide to scroll through and read all you need to know before you purchase the book. Very important. Read through first. And here you can order for the hard copy or the soft copy. And if you are not a Nigerian and you are not paying with Naira, this platform has an option for you to select the currency of your choice. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different currencies here, ranging from the dollars, the pounds, the Ghana cedis, the South Africa rands, and all other currencies you need to pay here. You can simply maybe switch. For example, I just switched to the dollar. Here's a dollar equivalent you can buy with the dollar. For the hard copy, that's for Nigerians only. And if you wish to get the hard copy and you're not in Nigerian, you can simply navigate to amazon.com and search mind eye trading. Just use the search bar to search mind eye trading. You'll be able to get the Kindle version, which is also the soft copy on Amazon, or you click on paperback here, where you'll be able to order the hard copy, which will be delivered to your location within the specific time that was stated here during your purchase. So over here on Amazon, you can get both the book, paperback, and Kindle. So that's all for that. Let's get back to the video and continue from whence we stop. Let's quickly talk about change of character around of this video. That's the last thing to talk about, change of character. Now, change of character, like I was explaining to some persons some time ago, that is why you have this here. Or let me delete it and also explain to you now. Now, the reason for change of character is in a way for you, those people who are not used to risk entry. Or more like me, I'm not a confirmation entry type. I'm okay with risk entry because the forex environment is risky. So why should one be very cautious when taking trades, even though it's important to be conservative, but at least we should also be open to risk. So the shift of environment, like I call it, and if you have gotten my book before or about to get it, you most likely see this word, this acronym there, SOE. It means shift of environment. It's another word to say change of character, even though it's a bit deeper than change of character. It is a way to explain that the market shifted environment from bearish to bullish or from bullish to bearish. It's no longer in the former environment it was in. And change of character, quickly, I will explain that and show you just one example on the chart and we are done. So change of character is in a way for you to know, first of all, reduce risk and confirm your trade. For example, if this is the 4-hour time frame and this is your H4 zone, let me say this is your H4 zone, and you are looking to buy when the market gets to this zone. So what change of character helps you do is this. Let me use a pictorial. Let me just draw something to show to you. Now the market is currently in a bearish trend, currently moving to the downside, and a lot of persons will be selling, including myself if I'm to be in this kind of trade or chart. Now while we are selling, you are patiently waiting for it to get to your 4-hour zone. So immediately it gets there to your 4-hour zone, what you would do is now wait for a change of character, which is usually formed by forming two lows and two highs. This is something I usually teach those people in the free Telegram channel, and even sometimes my students, that for a new trend to be confirmed or for you to use change of character rightly, in two highs or two lows must be formed. For example, this is a high, this is a low, and this is a new high. The market will come back to this point and continue to the upside. So this is change of character, where the market had to form a high. It had to break it to tell you that a new structure has been formed, and definitely comes for a retracement based on order flow and continue to the upside. Now there are two types of character, change of character or shift of environment. One comes with liquidity, taking liquidity, form of an inducement, while the other comes with order flow. What do I mean? The one that comes with change of character, the one that comes with inducement usually does something like this. From this same zone. While the one that just uses order flow does something like this from this same zone, something like this. This here is the order flow, market using order flow, fractal nature of the market, while this here is market using still order flow but inducement, because it's in a bid to trap early buyers in the market who will be here so as to take out their stop losses and come to retest here and continue to the upside. But most times this is the general change of character. It will just use order flow and continue to the upside. So while you'll be patiently waiting for your area of interest to take your buy from, all you just have to do is wait for a change of character, which is usually formed when two highs are formed and two lows are formed. Then the third low becomes where you are willing to take your buy from to the upside. So that is change of character and how to identify it. It must be at your point of interest or area of interest before you look to take the trade. The same for the opposite. When I invert this scale now, as you can see, let's say the market is currently in an uptrend, is currently bullish, and while the market is going to the upside, you are patiently waiting for it to get to your zone. When it gets there, all you just have to do is wait for a change of character, which is usually formed by taking this high, then the market coming back to take the low that formed the new high that took out the previous high, which was liquidity, then the market going back to retest that high, then continue in your direction, which is the order flow change of character. While the other one will be formed by taking this high, then that new high that was formed will take out this low, market will form a fake low, which will be like more of a QML, just to trap people into entry early sales and go back to take out their stop losses before the main sale will start, which will now be referred to as liquidity or inducement. So this is how to get a change of character when the market is in your zone. Let's quickly see an example and round up this teaching. Quick example from the chart. I will use the recent price action, which was the last buy that happened on Euro USD before the market closed on Friday. So looking at this recent price action, this is 15-minute time frame. If we are to take this trade using order block and should I say strong zones, strong high which is usually donated by this high, market taking liquidity and then breaking this. Now this alone is a change of character and a strong reason for you to take a buy from here to the upside. Now, since you've gotten this change of character and you want to take a buy to the upside, yet you are not still sure if you should test your pending order, you want to also wait for another change of character or shift of environment inside here before you take your buy. So all you have to do is mark your area of interest, which will most likely be this refined order block. Once it is marked, you can go to a lower time frame, maybe the 3 minutes time frame, to see a change of character before you take the buy. And what's the change of character here? Let me take out this position to make it easy for you. This was the last high that was formed, this area, and the market came to the downside, took out that high, change of character, two highs now have been formed, then the second low came to confirm, then this area becomes your buy area. Starting from your first point of interest, which if you want to take a trade from will cost you 12.1 pip, but now refining it down to this area, you would have your new area to be here, this point, and you will now have, instead of 12.5 pips, you now have just 3.2 pips. You can see how it was reduced. You can even go lower by going to the 1 minute time frame to refine this same entry, and you will still get the same change of character, more like the inducement form of change of character. As you can see here, like I explained, it did this high, it came down, did this new high, then came to retest, order flow, and the market continued to the upside. Still the same area. You here would even reduce your stop loss further to this point, which will now move from 12 pip initially to 3.2 pips, and now the new area would now be 2.8 pips stop loss, and you would take the buy from this point instead of that point I highlighted before, and your stop loss just maybe 1 pip below here, and the same take profit going to the 15 minutes to get the same take profit that we got before and was giving us 1 to 5 risk to reward. But now you are getting the same take profit, but this time for 1 to 13 risks to reward instead of 1 to 5, which was this initial one. So that's how to get your change of character. Do know that when you want to get change of character, let it be in your zone or your area of interest. You don't just take change of character everywhere. If not, the market can be bullish now, and it will be giving you fake change of character to the downside, something like this. Something like this. This is a change of character, and a lot of persons will be waiting to take a buy from here because it's a change of character, but the market can just come down to retest here as a form of taking out inducement, then take it out, retest it again, continue to the upside, give you another fake change of character again, and the next thing continues to the upside. So what the market is doing is inducing and taking out all the orders, all the buy orders that are here and all the sell orders that are here, taking out all the sales orders that are here and all the buy orders that are here, just to create enough money, which can also be called liquidity for the market makers while the market continues going to the upside. So this is how to use change of character effectively while trading. This will bring us to the end of the video. Don't forget to subscribe, share to your friends and family so they can also gain value. Don't also forget to like and comment. These things would encourage me to know that, okay, you are gaining value and I would continue making more videos. So that will bring us to the end of the video. The link to my free Telegram channel is in the description, as well as the link to get my book is in the description. Thank you for watching. See you in the next one.